Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, December 13th, 2018. Not a lot to report today because we had pretty much a flat day in the markets. SPY was down 0.03%, so virtually a flat close, and QQQ was up 0.03. We had a little more movement in the small caps, and I'll actually include that in the video. I had a couple requests recently for IWM, so we'll get to that. Otherwise, this video will be brief. Let's just start out here on the daily chart. Something I've been talking about recently was the fact that we had yesterday marked the third consecutive green day in the S&P 500. And today was actually the fourth consecutive green day in the Qs. Now, again, virtually flat. So let's really not try to read too much into what happened today. When you have a virtual flat day, markets went down a little intraday. They opened up, went down, closed about flat. So make of it what you will, but I try not to read too much into that. So let's see what happens now. I will say, and I'll get to the 60-minute charts in a second, what happened today, and I view it overall as near-term bullish, and I'll get to that in just a second and tell you why. But let's just wrap up or just do a quick update on the bigger picture, and this is what has helped formulate my near-term bias. Because again, you can't take much from today on a flat day, but what I am looking at here are the divergences in the S&P 500, strong divergences on the daily time frame with that recent low and everything I've talked about. We had dipped down below, recently undercut the previous lows, reversed, and most likely we're seeing some shorts squeezed out earlier this week. Today, we might have had some more shorts sucked in. But again, this market, like I said, it can go either way here. And I'll tell you, although I'm still leaning towards at least one more thrust up, open to the possibility, certainly open to the possibility of a December, even into January rally should these divergences play out. Make no mistake about it, the long-term charts are bearish. We are trading below the 50 and 200-day moving averages after a recent death cross in both SPY and QQQ, meaning the 50 crossed down below the 200. I use the EMAs. I don't know, SMAs are probably close, the simple moving averages, but we're down below trend. This is a key trend line that was broken down. So as such, you have to be suspect of any rallies. And again, right now I'm just looking for one last thrust up, but my convictions are not very high. Although that's how I'm positioned right now. I got stopped out today in NQ on the move down, re-entered later in the day when it looked like the markets had pretty much bottomed out for the day, and I was expecting them to ramp it into the close and park the indexes, or at least QQQ. That's the index that I'm focused on. I'm trading. We'll get to that in a second. One other quick. Well, let's look at that now. So there's SPY, and again, this what goes into my thought process here. So plain and simple, to me, it's a cross current of technicals with the longer term or intermediate outlook bearish with the technicals, but near term bullish. Cautiously bullish. Like I said, tons of overhead resistance, and that's why I'm cautious. And if it is a bear market rally, then that thing could get sold into any time. Let's look at QQQ, and then we'll talk about the intraday charts and wrap this up. QQQ, we also have let's find a board I like here. Here we go. This will work. We also had, as I mentioned, a divergent low on the second low. We had three major lows so far since this correction started. This one, and this one. SPY, it took until that third low to put in a divergent low, where QQQ, which started this whole thing and let it down, put in a lower low back here, and so far has made a higher low. We can't call this an uptrend yet. An uptrend is defined as prices making a series of higher highs and higher lows. This was an uptrend. There's your uptrend line. And so far, we are still in a downtrend. It's been called into question. We had 1, 2, 3. There's our lower lows, but so far we haven't made a lower low. Sounds like a yo-yo. A lower low since what was that? The 20th of November. And with this market, you look at these big red candles, that could happen just a day or two. But as of now, like I said, maybe a bit threading the needle here a bit, looking for a little more upside, but certainly open to the possibility that any day this thing could just drop out. So, if that sounds a little wishy-washy to you, it is. And no reason to be aggressively long or aggressively short, or if you are either way, just don't get married to your position. You can go either way. These divergences can play out. Some of the longest term trend indicators are still bullish, saying we're still in a bull market. We haven't dropped more than 20% off the highs. So if this is just a correction in an ongoing bull market that happened to do some more technical damage than the others, you have to pay attention to these divergences because bullish divergences on the daily chart can often lead to multi-month rallies, powerful rallies. So we'll see. So that's the near-term stuff. And let's talk about QQQ now. This is so far since this correction started back here in early October. Today is a first. I'm not going to sit there and start throwing confetti and getting all excited, but it is 4 consecutive green days up. So we close the day green, 4 green candles. Up until now, the best the market can do, both on SPY and QQQ, was 3 consecutive green candles. We had that happen twice. And they both happened, if you'll note, after we put in a significant low. And at that point, after 3 green candles, we had a little correction, which we need to. You don't go up forever. You get near-term overbought. People start taking profits, short pile in, and then we had one last thrust up. So will this be the same? Are we going to get another thrust up here? We'll see. Let's look at one other thing. I had a couple questions on these candles here because I have 4 green candles. Some people aren't showing the same thing. Depends on your chart settings. When you go into chart settings, whatever your program you're using, I like to use net change. To me, and in technical analysis, most people say price comes first and foremost before anything else. Volume, everything else. Price is king. And on a daily time frame, there is always a story, or not always, but usually a story to be told. What happens intraday, watching the intraday charts, watching some key levels find support, security reversing off that support level or breaking support and going down. But at the end of the day, the closing price is king. And so I use net change. If you use open versus close, well, that'll show you, okay, if you open the day, even if you close the day higher, but if you close below the open, it shows, as somebody pointed out on the YouTube channel, I believe it was, yeah, your sellers, the buying was met with selling, but yet, you can view it as you want, glass half empty or half full. But at the end of the day, if you have a green candle, it simply means that the buyers that day overwhelm the sellers. Doesn't matter how much they took it off the highs. It means the security, in this case QQQ, has closed higher each and every day. Another way to look at it, if you were short here, you've lost money each and every day, and if you were long, you've lost money. You made money each and every day. No, can't get any more simple than that. So again, let's not read too much into it. I just wanted to clarify that for those of you whose candlesticks might not match up with the ones that I'm showing you here. And just to zoom back out a bit, so you can sort of see from the trend lines that I have, this is the trend for QQQ. But the fact that the Q's closed up today, remember the QQQ and the tech-heavy, the tech stocks and the market-leading FANG stocks really started this whole thing, and they seem to have so far at least temporarily put in a bottom there, and from at least this point they're making higher lows. They've made a higher high and a higher low, but again, work to be done. Let's call this is the short-term outlook or picture trend, that is, and this is more of the intermediate trend here. And while this is a longer trend, if you take a step back from the 2009 lows, so those are your cross currents right there. And this is IWM daily chart. Same story. So you have positive divergence, bullish divergence, not yet confirmed in IWM. IWM was much weaker today, down 1.42%. But you still have these strong potential divergences. I say potential because I like to see the PPO turn back up and put in a higher low versus the previous low, and then in my book it'll be confirmed. But until then, these are momentum indicators and they're pointing down. So this isn't a downtrend without any buy signals yet. As I always say, divergence is not a buy signal, oversold is not a buy signal. They are indications that a trend reversal is likely, but I don't see, there's some support. I do have support. I don't show it here on this chart. I'll add it for you right now. There's some support right here. There's a reaction low, there's a reaction high. So we are at support, about 143, give or take, on IWM. However, if that support breaks, there's not a whole lot. The next very decent, solid support's down here about 133, 134. maybe if it happened quick enough, we'd still have the potential for divergent low. And we don't have to have divergent lows to rally. They do help set the stage for a lasting, I'm talking either a multi-week, possibly multi-month swing trade or a trend trade. So right now we are setting up for that possibility. But as you can see from these candles, we don't have any type of buy signals. I don't see it in the candlesticks. I don't see a reversal off that level yet. But we are at support. I have to say that. Depending how you trade. This would be an aggressive trade, but to go long here today where we closed, or right now in after hours, you're going long at support with a stop not too far below the recent lows. Although you have a pretty good shot of being stopped out because you're taking a counter trend trade without any buy signals. If you look at it from a pure risk reward point of view, so you have about a one, you can even give it a 2%. You want to give it a pretty wide stop for a flush out move, a 2% stop loss. And if we rally even up to that previous reaction high, that's 8.15, over 8%. That'd give a 4-to-1 RR. If we come up to that next reaction high, that's 10.5%. So there's a 5-to-1 risk reward ratio. So trade as you want. For members of the site, official trades, that's just too speculative. The risk of being stopped out is a little too high, but there it is for you. And again, I think worst case scenario, if we do get some type of flush out move, I think we'll find support down here around 133 on the small caps. And from where we closed today, to kind of give you a number, that's about 6 to maybe 7% downside. Anything's possible, but that would be an extreme, I think. Again, if we had a flush out move within the next few weeks here. But there's also a possibility we reverse these divergences and all that. Certainly for me, it's not worth shorting trying to get that because I wouldn't put very good odds that we're going to get down there before we have a nice counter trend rally, if that makes sense. Here's the 60-minute chart of SPY, the S&P 500. I love my divergences if I can get them. I like to look for divergent highs and divergent lows. My preferred swing trading time frames are the daily and 60-minute charts. You get it down on the shorter term charts. You might get a shorter term swing trade, but these are more reliable when you get the divergences here on the 60 minutes. You can see we had a divergent low down there in the SPY. Nice rally after that. We gapped up above the trend line, ran away following this divergent low. And at this point, we had a small divergent low right there. Roughly equal lows in price, higher lows in the indicators down below. Nice little rally. And now, so what I've drawn here is potential. If we get knocked down tomorrow or into next week and we take out the recent lows, that will be another new low on this correction and would probably usher in again some more shorts, clear out some more longs, but that's one scenario. It's not my preferred scenario right now, but I want to throw it out there in case it happens. And sometimes these things happen quick before I can get videos out. And so it would look something like this. You would have another washout move. If you get a quick reversal, as you can see, we'd have a positive divergence there on the 60-minute time frame. And that could, again, if you couple that with what you're seeing on the daily charts, well, it would simply extend. These divergences on the daily chart have plenty of room to move down if we get another thrust down and still stay intact. And again, so really what I'm looking for here is the end of this correction. I think unless we get back up here anytime soon, I just don't see enough meat on the bone to short right here. Again, I think maybe we get that flush out move that people were looking for. A lot of people were looking for, and if so, it might not go much farther than the recent lows. And again, it's these divergences and other things that give me pause on that. So there it is. But as of now, I'll go back to where we were, what I was talking about all week. I have some targets on the 60-minute chart. Where do we go? They're not much higher. 270.36. Remember in the last videos, I had this resistance zone here we failed at yesterday, a little more downside today. But they didn't take it down hard. See, this failure wasn't like the previous failures where we had a lot of impulsive selling. So it seems to me that the sellers may be washed out near term. And I'm just looking at a lot of market leading stocks that appear to be sold out. So that's what I'd like to see tomorrow and possibly in the next week, some more upside. I'm still favoring this 270.36 target and open to the possibility of more if and when that's hit. So that's where I'm looking right now. QQQ. The target that I have here remains 168.49. Again, the Q's closed green. And if you watched it intraday, I know some of you come home, you work a full-time job. Here's today's price action. So if you look at this as a 1-minute chart, so you can see the close yesterday right there. So we gapped up, we traded green a little bit in the morning. They took it down. But you can see the Qs were pretty resilient. They took it red for most of the day, managed to close it green. Not by a lot, but again, so it shows that maybe for the time being, the sellers are washed out, or all the sellers, anybody coming in shorting today, has been met with equal buying. But again, let's not try to read too much into a flat day. And finally, to wrap it up here, as far as targets, well, you can see this downtrend line that has sort of formed off the top. Not super well defined, but I think worth watching. You can play around, move it around a little bit, and to change angle where it comes in. And that would come in just above the 20 and yeah, the 50 and 200 day exponential moving averages. They've already been traded through a couple times here. At least that, yeah. Well, the 50 has contained all bounces so far. If I turn the 50 up, you can see that yellow line there. Since the selling started, we failed right at it here. Took it out briefly there and then fell back down below it. And again, you have the 50 and the 200 day coming in close together. They were traded through here that one day right after the G20, failed back down. So watch that. So bottom line is, and again, this is one reason I'm not putting official long trade ideas right now, because I don't, the risk reward and the probability of success on a trade right now on the long or short side aren't high enough for that. Trade this market as you want. I'll give you my updates. As you know, I went from being bearish on Friday to bullish on Monday morning. Bearish Friday at the close, bullish by the morning on Monday, and that can happen again. And therefore, I don't want to whipsaw the official trade ideas, but I'll do my best to communicate my thoughts. But what I'm showing you here is a lot of key resistance up here. That previous reaction high, that reaction high above that. Those are levels to watch. But a break above that level, that downtrend line, would start to call the near-term downtrend into jeopardy in QQQ. Remember, that's a downtrend, a series of lower highs and lower lows, which is what we have so far. And so a break above that the downtrend line and that previous reaction low, and of course that has the potential to spark a rally for another back test of that trend line. And heck, that then you're not too far from the previous highs as well. I don't want to get ahead of myself, but I want to just lay out the possibilities so we can sort of map this out and have a game plan and react to whatever happens. SPY has a lot of work to be done as well to get up there, but you can see with SPY, it's more so almost a horizontal level with those three equal highs. It's slightly downward sloping. And so as far as bounce targets, if everything goes well over the next week or so and we get a Christmas rally, December rally, I'm sure a lot of eyes will be watching that level if and when we get there. So, and of course, you still have to take out the MAs right there, the 50 and 200 day exponential moving averages. So, like I said, it's try to squeeze out nickels in front of a steamroller here is really what I'm trying to do on the longs right now. And I'll also say this, trade ideas for the broad market on the site are they'll probably continue to be light the rest of the month, because December historically, at least for me, has been just an awful trading month. It's tough. Volumes start dropping off. Everybody's going on vacation. So volumes light. You have the end of the year tax selling, and what from my experience, you have a lot more whipsaw signals, false buy and sell signals. So historically, I usually take the last few weeks of the year off. I'm still on the site. I'll still answer questions. I'll still post what I see, but I lighten up on my trading. And if I see a trading op, sure. If it's something in there that looks good, I'll jump on it. But for the most part, I've reduced my swing trade positions, and my active trading stuff kind of drops off. I've just learned it's better. Again, it's from years of experience. Fool me once, shame on you. Fool me twice, shame on me. So I've been probably fooled a half dozen times or more, and I've just learned over the years, keep things light around the holidays. And then after the first of the year, everybody comes back and all the players step back onto the field. So we'll hopefully have some setups ready to go as we hit the new year running. And I will, of course, I'll keep these updates coming. You never know. Sometimes there might be a stealth rally brewing here, and we could get, like I said, we still could get a nice rally here in December if we can build on these gains tomorrow. And if I continue to see some bullish price action, just continue to maybe trail up stops right now in the longs that I have, and see if we can maybe get up above those MAs and maybe come up here to test the top of that range. And again, I'm favoring QQQ right now, but I'll tell you, financials are starting to look interesting to me. I know they've looked like death recently, and I'll cover that on the site. I'm going to wrap it up here. This has been Randy Finney with the right side of the chart. Hope you enjoyed it.